All right, guys, welcome back for another video. Well, in this video, I want to talk about, or I want to make the bullish case for Bitcoin using the Bitcoin price chart and talk about some of the historical extremes in the market. But, I also want to talk about dollar-based liquidity. A lot of people are waiting for the Fed to pivot or the Federal Reserve to increase dollar liquidity before they're looking for Bitcoin to, mount a rally. One thing I want to point your attention to is the Central Reserve Bank of New York credit swap operations. Excuse me, that's the Federal Reserve Bank of New York central bank liquidity swap operations. This is their the basically the facility the Federal Reserve has to inject dollar-based liquidity abroad, and this is a way for them to inject dollar-based liquidity to their European, Japanese counterparts. This is a way for them to increase the supply of dollars globally without, with maintaining plausible deniability and being able to say that they're restricting the supply of dollars, domestically and fighting inflation domestically. So, the Fed can play both cards at the same time or both sides of the same card. Now, a lot of people, when they look at this, this facility, they only see the recent settlement trade. So, for example, if you went to this website, you would see this recent $207 million trade. Most of it settled with the ECB. But if you go here and widen the search results, like here I've done June, you can go all the way back and you can see how much of these have basically been injected. You got the 200 million, 200 million, 200 million. And, a lot of what these represent are basically, as credit's tightening in globally, really, by what the Fed's doing. Now, remember, everybody has dollar denominated debt. So when the Fed tightens financing costs, it affects the whole world, and it affects the rest of the world more, dramatically than it actually does domestically. So a lot of these, European institutions, they're if they're over leveraged, then maybe they go under, and they need a bailout, right? But they need a bailout in dollars, right? It's a dollar shortage issue. Um, so one way that would happen is if you had a European or excuse me, not a central bank, a large European bank. The Federal Reserve could do a credit swap operation with the ECB, and then you'd see it go to the ECB, and then from the ECB to that respective bank. But you can see here, these things they're not big enough to turn any eyes, right? 200 million there, 300 million there, 200 million there, 200 million there, 200 million there. 200 million, it's not enough to turn eyes in themselves, but if you add them up in the aggregate, it starts to get significant, right? Especially when you get into the October area. You get to October, and then you start seeing, individual transactions for 3 billion, right? And then 6 billion, and then 11 billion. So when you add all these up, I mean, you do get pretty significant, right? If you were to add all these credit swaps up, you would start to get into like the 50 billion, approaching, 100 billion. Maybe not quite that much, but you're definitely getting close to 50 billion. And it's something to keep an eye on, right? Because if you do see, a major crisis start to brew in Europe, you'll see these numbers start to swell, right? And, swell to like 20 billion, 40 billion, 50 billion, 100 billion. So something to keep an eye on, definitely. Again, right now, I see this as this is the money printer, right? This is increasing the supply of dollars globally. Just not in the amount that turns any eyes yet, but this is something I don't think a lot of people are paying attention to. That's very important and could be important in the future. Now, what's interesting is that the broader equities market actually bottomed in October, and you see that's when these credit swaps start to go up from like the 200 million roughly to up to your 3 billion, 6 billion, 11 billion. That happened in early October, and what's interesting is that the equities market actually bottomed in early October. Now, is that a causal relationship? No, of course, there's other stuff going on in the markets, but it is interesting. And now, just tying it all back into Bitcoin, I want to point out that there's a lot of historical things going on in the price chart. So, first of all, we have the first all-time test of a previous all-time high ever in Bitcoin's history. You also have the first confirmed bullish RSI divergence on the weekly chart ever in Bitcoin's history. This You also had the biggest exchange to collapse in Bitcoin's history, FTX, right here, and that led to the biggest weekly candle volume in Coinbase's history ever, down below these lows. Now, what do these lows represent? Well, those lows represented one of the largest net realized profit and losses ever in Bitcoin's history. So here you have realized profit and loss on that low hitting historic extremes. So it's just an illustration of how, this area in the market is hitting. There's a lot of things that have never happened before in Bitcoin's history that are happening right now. Um, and while this is not a huge deal. This FTX is not a huge net realized profit and loss. But if you add it in the aggregate to this highest ever net realized loss on the June capitulation, then in aggregate, it only adds on to it and compounds basically what is a historical extreme. So a lot of stuff happening here, again, that is historical extremes. You know, what does, I mean, will the market have to wait until the Fed comes out and saying, "Hey, we're cutting interest rates, we're printing trillions of dollars"? Not really. I mean, that doesn't generally happen all that much, right? I mean, you generally don't. People don't come out and give you the green light that the market has bottomed. Generally, that type of signal will only come like once price has already made a dramatic uh, rise higher. But um, you know, I do think that in the context of what's going on, like in the rest of the world, uh, you see a lot of the rest of the central banks in the entire globe, excuse me, entire world, printing an extraordinary amount of money, right? So whether it's the ECB or the Bank of Japan or the Swiss National Bank or any, pick your central bank, right? A lot of those central banks have been printing nonstop for the last like couple of years. I mean, really, since the COVID pandemic, they really didn't stop at all. It's only the Federal Reserve that has stopped, and really, a lot of the problems right now are actually international. So I think being too hyper focused on domestic liquidity injection by the Federal Reserve is going to lead people to miss some of the international credit injections that are occurring, and the supply of dollars swelling globally. You know, if you think about it in the broader context of what's going on geopolitically with Russia and Ukraine, basically, you have a scenario where the United States is encouraging its allies in Europe to maintain ranks and not trade with Russia, and that means not accepting Russian energy, Russian oil, natural gas. And that puts incredible strain on their economies. They have to issue new debt to paper over those issues. And again, issuing new debt just means printing money. They're the same thing. So if the Fed wants and the U.S. government wants these allies to be able to maintain operations as normal while not trading with Russia, they have to provide them with some type of liquidity to finance their energy needs. Because if they don't inject liquidity into the European system, then the European system is going to explode. The currency is going to hyperinflate, and you know they can no. I mean that's obviously a terrible scenario, right? Because the European banking system is obviously too big to fail, right? If they were to fail, then you would have a global crisis, and everybody would get pulled into it, and the Fed would have to print trillions of dollars, which is exactly what they don't want to do, right? They want to get by, doing these small 200 million injections where needed. So anyway, I just wanted to highlight this Federal Reserve Bank of New York facility, the credit bank liquidity swap operation facility, and provide a little bit of a challenge to the idea that the supply of dollars globally is going down. Right? It's not. It never goes down. Only the rate of change of expansion in the dollar supply globally goes down. But that's just the rate of change. The supply of dollars never actually goes down. So anyway, something to think about. Hope you guys like this video. If you guys do like this type of content, just make sure to leave a like on the video, subscribe to the channel. I'll catch you guys in the next upload.